After studying this module, you shall be able to learn the classification aspect of accounting process, understand the concept of ledger, learn the methodology for principal books, know the manner of preparation of ledger, learn the manner of balancing of accounts, understand the meaning of trial balance, identify the objectives of preparation of trial balance, evaluate the various methods of preparation of trial balance. Under double entry system, for every debit, there will be an equal credit. In first phase of accounting, journal entries are passed, followed by classification of such recorded entries. These are grouped into by preparation of accounts. This book is called as ledger. At the end of each period, the balancing of these ledgers account is made. In this process, we arrive at the net balance of all the ledger accounts. The dual aspect system shall always prevail in whole accounting theory. Hence, the sum of these debit balances must be equal to sum of all credit balances. In order to verify this, a schedule is prepared to assure the arithmetical accuracy of the books of accounts. Such statement is called as trial balance. In this module, the methodology of these principal books and the trial balance aspects has been discussed. Ledger. Meaning. The ledger is the principal book of accounting system. It is the book which contains different accounts where the corresponding entries are posted. It serves as the main book in the accounting system. That is why it is called as principal book of accounts. A ledger may be in the form of bound ledger, cards or sheets, or in any other form. Usually, separate page is used for each ledger account. It is important to note that the ledger is always numbered consecutively. It is so because this page number, called as folio, is written in journal as the corresponding reference number. Utility. A ledger is a very useful tool in accounting system due to which it is regarded as principal book of accounts. The ledger gives consolidated information about a particular item at one place for a period. It is so relevant that the entity may find out the net balance of all transactions of a particular item at any point of time. For example, if a firm has purchased goods from a particular supplier frequently on credit basis with payments on account from time to time, then with the help of ledger, one can always find out the outstanding amount due to such supplier. Another important utility of ledger lies in its usefulness in preparation of trial balance. Format. The ledger account is prepared in T-shaped format. The usual format of an account is as follows: debit, name of account, credit. The information contained is date, particulars, JF, amount, date, particulars, JF, amount, to such and such, by such and such, to such and such, by such and such. As it is very evident from the above, a ledger contains the following details. 1. Date. This column contains the date of the transaction. The opening and closing balances obviously appear at the beginning at closing date respectively. 2. Particulars. In this column, the name of corresponding account appears. The posting is made using to or by in debit and credit side respectively. Journal folio JF. This column reflects the page number of book of original entry, that is journal or any subsidiary book, which contains the corresponding journal entry. 4. Amount. The amount column states the amount of the transaction. Example 6.1. On 12 June 2015, a firm has received rupees 15,000 in cash from Raman and Company. Accountant has passed the following journal entry. Cash account debited 15,000 to the credit of Raman and Company 15,000. Prepare cash account and the ledger account of Raman and Company in the books of the firm to show the posting of these two ledger accounts. Answer. Cash account. Date we write 12/6/15. Particulars to Raman and Company. JF we have left blank and amount is 15,000. This is the cash account. Raman and Company on the right hand side, date is 12/6/15. Particulars by cash account. JF is left blank, amount 15,000. Example 6.2. Prepared the stationery account for the first month of the accounting period, that is January 2014, from the following particulars. You need not to pass any journal entry, only ledger account is required. January 2014, particulars, amount. 5. Purchase of inventory in cash 1500. 10. Purchase from Shyam on credit 1000. 15. Purchased on cash basis from Janna Stationer, New Delhi 900. Purchase of goods for cash 12,000. 27. Cash paid to Shyam on account of stationery purchase on 10th January 1000. Stationery account. 5/1/14 to cash account 1500. 10/1/14 to Shyam account 1000. 15/1/14 to cash account 900. Note: no posting will be made for the transactions dated 21st and 27th January 2014. In fact, purchase of goods is to be debited to purchase account and not to stationery account. Similarly, cash paid to Shyam will be debited to Shyam's account. Distinction between journal and ledger. The journal and ledger are sequential parts of double entry system. The duo books are the indispensable for the accounting system. The points of differences between the two may be summarized as under. First, I'll talk about journal. Journal is books of prime entry. Chronological order is used. Process of recording is called as journalizing. Balancing is not required. It acts as a base for ledger. The net balances of any account cannot be ascertained. On the other hand, under ledger, these are principal books. Analytical manner is used. The process is called as posting. Balancing of all ledger accounts is made. It acts as base for trial balance. The net position of any account can be ascertained. Classification of ledger accounts. Usually, All the ledger accounts are classified into 5 categories. A. Assets, B. Liabilities, C. Capital, D. Revenues/gains, E. Expenses/losses. All these accounts may further be put together into 2 groups, that is, permanent accounts and temporary accounts. Permanent accounts include real accounts and personal accounts, whereas temporary accounts include losses, expenses, incomes, and gains. All permanent accounts are balanced and carried forward to the next accounting period. These permanent accounts appear in the balance sheet. On the contrary, the temporary accounts are closed at the end of the period. This classification is very important in the context of preparation of financial statements. Balancing of an account. At the end of each period, it is necessary to find out the net balance of each account. The total of one side of the account is compared with the total of another side and the differences found out. This process is called as balancing of ledger accounts. All the ledger accounts are balanced except nominal accounts, which are taken to trading and profit and loss account. It means only personal and real accounts ultimately show balances. These balances may be of 3 types. Number 1, no balance side. Total of debit side is equal to total of credit. Debit balance side. Total of debit side is greater than total of credit. Credit balance. Total of credit side is greater than total of debit side. The closing balances of real and personal accounts of a period become the opening balance of the next period. It is important to note that the balance of an account depends upon its type. For example, all the assets must have debit balances, whereas liabilities have credit balances. Similarly, expenses and revenues have debit and credit balances respectively. The following example illustrates this fact clearly. Example 6.3. Identify the routine balances in the following ledger accounts: capital, sales, purchases, interest received, inventory, debtors, creditors, sales return, purchases return, bad debt recovered, salaries, cash, bank overdraft, drawings, rent, rent received, machinery, goodwill, discount received, and freight. Answer. It is in 3 columns. Important are ledger account and type of balance. Capital, balance is credit, sales credit, purchases debit, interest received credit, inventory debit, debtors debit, creditors credit, sales return debit, purchases return credit, bad debt recovered credit, salaries debit, cash debit, bank overdraft credit, drawings debit, rent debit, rent received credit, machinery debit, goodwill debit, discount received credit, freight debit. Meaning and definition of trial balance. Meaning: the preparation of trial balance is the third phase of accounting process. A trial balance is a statement showing the balances of all the ledger accounts at a particular point of time. Definitions. According to Rollin, The final list of balances, total and combined, is called as trial balance. According to the Dictionary of Accountants by Eric L. Kohler, trial balance is defined as a list or abstract of balances or of total debits and total credits of accounts in a ledger. The purpose being to determine the equality of posted debits and credits and to establish a basic summary for financial statements. Periodicity. Usually, trial balance is prepared at the end of the accounting period, but it can be prepared at any point of time. It may be noted that computerized accounting packages are capable of providing instant trial balance reports even on daily basis. Suspense account. When there is a mismatch in the trial balance totals, there is a need to scrutinize the work already done. Usually it is done by the accountant himself. He may be able to locate the problem if there are very few errors. But when a combination of errors have been made, thorough scrutiny and detailed checking of the books of accounts are required. If sufficient time is not available, then the difference is transferred to the suspense account. There may be any balance in suspense account. It is important to note that suspense account is a temporary account which is opened just to proceed further and to prepare financial statements timely. Features of trial balance. 1. The trial balance is a statement and not an account. 2. It shows the balances of all the ledger accounts including nominal accounts. 3. It is not a part of financial statements. 4. It serves as a basis for preparation of financial statements. 5. It is a link between books of accounts and final accounts. 6. It is usually prepared at the end of accounting period. Objectives of trial balance. The preparation of trial balance has the following objectives. 1. Arithmetical accuracy. The trial balance helps to establish arithmetical accuracy of the recorded transactions. 2. Summary. The trial balance provides a ready reference summary of balances of all ledger accounts. 3. Basis for final accounts. It provides basis for preparation of final accounts. If the balances are taken from different folios of the ledger books, the work may be cumbersome. So, trial balance facilitates the preparation of final accounts promptly. Limitations of trial balance. Generally, trial balance is prepared to check the arithmetical accuracy of accounts. But the agreement of both sides of trial balance is not a conclusive proof of accuracy of recording, posting and balancing. Even in case of tallied trial balance, some errors may still remain. These may be of following types. 1. Omission of recording of transaction. 2. Recording of transactions at wrong amount. 3. No posting of transaction at all. 4. Entry is posted twice in a ledger. Format of trial balance. Since trial balance is a statement showing balances of ledger accounts, it is always prepared as on a particular date. Usually, 5 columns are prepared. 1. Serial number. 2. Ledger account. 3. Ledger folio. 4. Debit amount, total or balance. 5. Credit amount. total or balance. Trial balance abstract as at so and so date. Serial number, ledger account, ledger folio, total of debit side amount, total of credit side amount. Capital on credit side, drawings debit side, opening stock debit, purchases debit, wages debit, sales credit, building debit, debtors debit, creditors credit, etc., etc., and then total. So total of debit and credit side should tally. It is important to note that following rules are followed while preparing the trial balance from the given list of ledger balances. 1. Debit side. The following are placed to the debit column of the trial balance: A. Asset, B. Expenses, C. Losses, D. Drawings, E. Cash and bank balance, F. Prepaid expenses, G. Outstanding incomes. 2. Credit side. The following are placed to the credit column of the trial balance: A. Liabilities, B. Income, C. Revenue, D. Bank overdraft, E. Outstanding expenses, F. Income received in advance. Illustration 6.4. Consider the following ledger balances relating to Mohan Traders appearing as at 31st March 2015. Particulars given are ledger accounts, amount, ledger accounts, amount, ledger accounts, amount. I am reading left to right. Capital 80,000, discount allowed 3,000, sales 1,76,000, sales return 2,000, debtors 75,000, purchases 1,40,000, purchases return 5,000, creditors 35,000, expenses 15,000, interest received 3,000, insurance paid 6,000, cash in hand 40,000, investment 18,000. Prepare a trial balance as at 31/3/2015. Solution. Trial balance of Mohan Traders as at 31/3/2015. Serial number, ledger accounts, ledger folio, debit amount, credit amount. 1. Capital, credit side 80,000. 2. Sales, credit side 1,76,000. 3. Purchases, debit side 1,40,000. Purchases return, credit side 5,000. Sales return, debit side 2,000. Discount allowed, debit side 3,000. Expenses, debit side 15,000. Debtors, debit side 75,000. Creditors, credit side 35,000. Cash in hand, debit side 40,000. Interest received, credit side 3,000. Insurance paid, debit side 6,000. Investment, debit side 18,000. The total of both debit and credit side comes to 2,99,000. Methods of preparation of trial balance. Total method or gross trial balance. Under this method, the ledger accounts are not balanced, rather merely totaled. The total of the debit side and credit sides are called as debit total and credit total and are entered on the debit and credit side of the trial balance. There may be some accounts like rent account wherein total appears to one side only. In that case, the total is transferred to corresponding one side only. The basic advantage of this method is that it does not require balancing of accounts. But the preparation of financial statements is not possible with this method. It is the main limitation associated with this method. The following trial balance has been prepared using total method. Trial balance, total method as at so and so date. So serial number, ledger accounts, ledger folio, total of debit side, total of credit side, amount. Number 1, capital account, 1000 debit, 36,000 credit. Cash account, total 71,000 debit, 56,000 credit. Sales account, 61,000 credit. Sales return account, 200 debit. Furniture account, 6,000 debit side. Computer account, total side, debit 16,000. Debtors 60,000, 50,000, 200. Creditors, total of debit and credit 43,000, 50,000. Purchases account, debit 52,000. Purchases return account 1,000 credit. Salaries 5,000. Again you see the total of both the sides is 2,54,200. Balance method or net trial balance. Under this method, all the ledger accounts are balanced. The balances may be either debit balance or credit balance. This net balance is taken to trial balance. This is the most commonly used method adopted by accountants. It facilitates the easy preparation of final accounts. Trial balance, balance method as at so and so date. The particulars are serial number, ledger accounts, ledger folio, debit balance amount, credit balance amount. 1. Capital account, credit side 35,000. 2. Cash account 15,000 debit side. 3. Sales account, credit balance 61,000. 4. Sales return account, debit side 200. 5. Furniture account, debit balance 6,000. 6. Computer account, debit balance 16,000. Debtors, debit balance 9,800. Creditors 7,000 credit side. 9. Purchases account, debit balance 52,000. 10. Purchases return 1,000 credit balance. 11. Salaries 5,000 debit balance. The total again you see of both the sides is agreed and is 1,04,000. Total and balance method or compound method. This method is basically the combination of above two methods. Under this method, totals of both the sides of the accounts are taken in trial balance. Along with this, the net balances are also computed and are written in separate columns. This trial balance contains 7 columns. The following trial balance shows compound method. Trial balance, compound method as at so and so date. The particulars are serial number, ledger accounts, totals, debit side, credit side, net balances, debit balance, credit balance. 1. Capital account. Totals are 1,000 and 36,000. The net balance is 35,000. 2. Cash account. Totals are 71,000, 56,000. Net balance debit side 15,000. 3. Sales account. Credit side total 61,000. Net balance credit side 61,000. Sales return account 200. Furniture account debit side 6,000. Number 6, computer account 16,000 on debit side. Debtors totals are 60,000, 50,000, 200. The balance is 9,800 debit. Number 8, creditors. The totals are 43,000, 50,000. The net balance is 7,000 credit. Number 9, purchases account 52,000. Balance 52,000 debit side. Purchases return account 1,000, both under balance as well as totals. Salaries debit both in totals and balance. You see the total. For the total side 2,54,200, 2,54,200. Under the net balance method it is 1,04,000 and 1,04,000. Illustration 6.5. From the following ledger balances, you are required to prepare trial balance as on 31st March 2015. Capital rupees 4 lakhs. Investment rupees 1 lakh. Closing stock rupees 6 lakhs. Interest received rupees 50,000. Accrued interest rupees 20,000. Carries outwards rupees 30,000. Creditors rupees 3 lakhs. Salaries rupees 1,20,000. Carries inwards rupees 20,000. Debtors rupees 6 lakhs. Sales rupees 50 lakhs. Purchases rupees 40 lakhs. Bills payable rupees 50,000. Petty cash rupees 50,000. Discount allowed rupees 50,000. Building rupees 4 lakhs. Outstanding expenses 50,000. Prepaid insurance 10,000. Depreciation 20,000. Cash at bank 4 lakhs. Loan account credit rupees 3,30,000. Profit and loss account rupees 1 lakh. Bad debt recovered rupees 10,000. Provision for bad debts rupees 30,000. Journal reserve rupees 1 lakh. Solution. Trial balance as at 31st March 2015. Ledger accounts, debit amount, ledger accounts, credit amount. On the debit side you find cash at bank 4 lakhs, petty cash 50,000, depreciation 20,000, prepaid insurance 10,000, outstanding expenses 50,000, building 4 lakhs, discount allowed 50,000, purchases 40 lakhs, debtors 6 lakh, carries inward 20,000, salaries 1,20,000, investment 1 lakh, closing stock 6 lakhs, carries outward 30,000, accrued interest 20,000. The total is 64,20,000. On the credit side, you have journal reserve 1 lakh, provision for bad debts 30,000, bad debt recovered 10,000, profit and loss account 1 lakh, loan account credit 3,30,000, bills payable 50,000, sales 50 lakhs, capital 4 lakhs, creditors 3 lakhs, interest received 50,000, outstanding expenses 50,000, and the total of credit side comes to 64,20,000. The ledger is the principal book of accounting system. It is a book which contains different accounts where the corresponding entries are posted. The journal and ledger are sequential parts of double entry system. All the accounts may further be put together into two groups, that is, permanent accounts and temporary accounts. Permanent accounts include real accounts and personal accounts, whereas temporary accounts include losses, expenses, incomes, and gains. At the end of each period, it is necessary to find out the net balance of each account. Trial balance is defined as a list or abstract of the balances or of total debits and total credits of the accounts in a ledger. The purpose being to determine the equality of posted debits and credits and to establish a basic summary for financial statements. When there is a mismatch in the trial balance totals, there is a need to scrutinize the work already done. If sufficient time is not available, then the difference is transferred to the suspense account.